variance analysis. Okay. Now, variance analysis is a topic which is taken up. See, every organization prepares the plans for the organization for the future period of time. When that time period comes and the plan is implemented, at that time there is a comparison made with what actually was implemented with what they have decided. And if there are variations, those variations are looked into, analyzed, and if there is any possible way to correct the deviation, measures are taken to correct the deviation, or sometimes the standards are also revised. So that is the procedure of implementing a control system in an organization. Now, for the entire organization, when things are planned by way of budgets, we call it as budgetary control. But if the standards are decided for the elements of cost, we've learned about the elements of cost, material, labor, and expenses. For these things are again subclassified as direct and indirect. So we have direct material, indirect material, direct labor, indirect labor, and direct expenses and indirect expenses. But standard costs, when they are decided for what is the cost of material, what should be the standard cost of material, what actually was the material cost incurred. Similarly with the labor, then overheads. So then the planning is taken up for each element of cost as material, labor, then overhead cost. Then later on, when they are incurred, then each of these element of cost, the actual is compared with what is planned or what is the budgeted figure, and then the reasons why there are variations are looked into, and the later course of action is taken up. So by finding out a variance arises when there is a comparison about what is the actual and what is the planned or standard or budgeted figure, the standard figure. So the budgeted or the standard figures, what did they plan and what actually happened? These two things are compared, and when on comparison, they identify whether they are on par with the plan, the standards, or is there a variation. So that is what has to be can be understood. See, variation need not always be looked into as a negative thing. Variation could also be a positive thing. So here, under this topic, we are going to look into the calculations, and there are certain advanced things. See, the way the CIMA material has presented, um, I have included this in the PPT, but then for convenience sake, the way we can understand it, we will do it and then take it forward. So the variances are calculated for the revenue part also. It's not only the cost. The revenue variances are calculated, and also the cost variances. So two categories. The revenue, the first part of it is the sales variances. The second part of it is the cost variances. First is the sales variance, then we have the cost variance. So to begin with, let's start with the cost variances. I'll take you to the a word file. We'll just figure it out and then come back again here. I'll give you a small gist of it about how do we calculate these variances. Just give me 1 second. I'm opening the. variances, we have variances calculated for cost and also revenue. There are cost variances, there are revenue variances. Under cost variances, we have the variances mentioned for material, then we have for the labor, and the third one we have it for the overheads. So these are three different categories. So starting with the material, let's say if we are talking about the material variances. Okay, material variance, how do we calculate what is the material variance? Um, as I move the sheets, things will get erased. Okay, so now if we talk about the first one, material, first we find out what is the material cost variance. How to calculate what is cost variance? Material cost will be calculated as the number of units of material into the price per unit. That is how the material cost is calculated. Now, if we are talking about what is the material cost variance, so material cost variance will be the difference between the standard cost of material minus the actual cost of material. So that is how a variance can be calculated. So this will be the standard cost of material minus the actual cost of material. So that is how we calculate. But cost of material is basically made of the standard rate into standard quantity. So that will give us what is the standard cost of material. Standard rate into standard quantity minus, we have it as actual rate into actual quantity. So that the difference between the standard cost of material minus actual cost of material talks about the variance. So what do we understand? Basically, material variances are made up of two variables. One variable is the rate or price, what we call it as. Another variable is the quantity. So we are comparing the quantity, the standard quantity, how many number of units are planned to be used, how many did they end up using, what was the rate at which the material uh, has to be spent on, and what actually happened. So we find out the difference between the standard cost of material and the actual cost of material. So there are two variables, that is rate variable and quantity variable. So they are classified as um, the cost variance. The cost variance can be again split into material, either we call it as rate or price, anything. Okay, material price variance, or we can also use the term as rate variance, material price variance. So what do? We just compare the price part of it. So material price variance is equal to the difference between the standard price and the actual price. Standard price minus actual price. This is applicable at for the all the number of units. The actual number of units, all the number of units which are the actual quantity. So the way we remember a price variance will be actual quantity into standard price minus actual price. Then the other variable is the material quantity variance, or this is also called as material usage variance. Material quantity variance will be the difference between the standard quantity and the actual quantity. The difference in the usage, standard quantity and the actual quantity, applicable at the standard rate or the standard price, whatever we call it as. So this is applied at the standard rate, standard price. This also let's put it as rate only, because uniformity would be there. You won't get confused. Price, or also it can be called as rate. Then the quantity is how many units of quantity of how many units of material was intended to be used and how much they actually ended up using. So the difference between the standard quantity and the actual quantity is considered applicable at the standard rate. Done. So when it is about the usage of the quantity, it is not always that only one type of material is used for the production. More than one type of material also may be used for production. 2-3 varieties of material may be used for production. So there arises a mix of material. So maybe A and B or C, these are the materials which are used. So if when there is a mix of material which is used, so for each type of material something must have been planned. What did they actually end up using? So this can be split into, we will see what are the formula about these things little later. This can be further split into material mix variance, and for the quantity of material which is introduced, what is the output which is yielded, that is material yield variance. So usage variance or the quantity variance is split into material mix variance and material yield variance. Um, this is the broad gist of what we have it as material cost variance. So wherever material is there, we can replace that with labor. So labor cost variance is equal to labor rate, the labor standard rate, into quantity will be replaced with time or our standard time, minus actual rate into actual time. So the quantity will be replaced with standard time or standard hours, the way it is mentioned. Standard time or standard hours will be there. Here it would be actual hours. Cost variance will be split again into labor price variance. Okay. So actual quantity will be actual hours into the labor rate, the standard rate. Okay, the standard rate minus the actual rate. And then for material quantity variance, there is no quantity in case of labor, no. So we call that as um, labor efficiency variance. So the quantity term will be replaced with labor efficiency variance. The usage is the efficiency is in terms of the usage of time. How many hours were actually allotted, how many hours did they use. So that talks about whether they were efficient or not. Standard hours minus the actual hours. In case of labor also, there could be a mix of labor. That is, labor are categorized as skilled, semi-skilled, unskilled. So how many hours of each category of labor were used, how much was planned, how much was used. So there arises the concept of labor mix variance, labor yield variance. So the summary, the gist of it can be presented this way. We have first material under the cost variances. We have first the material cost variance, which is basically the difference between the standard cost of material and the actual cost of material. Standard cost of material is standard rate into standard quantity minus actual rate into actual quantity. The cost variance can be split into two variables, that is the price variance, price or the rate variance, and the quantity variance. The price variance will be the difference between the prices or the rates applied at the actual quantity. The quantity variance will be the difference between the quantities applied at the standard rate. The usage variance or the quantity variance can be again split into material mix variance and material yield variance. The same thing, wherever material is there, that can be replaced with labor. The same set, the same logic applies even for the labor cost also. So the labor cost also can be calculated in a similar fashion. um, so labor cost variance is the labor rate, the standard rate into standard time or standard hours, actual rate into actual hours, and material price variance will be called as labor price variance or labor rate variance. The actual hours applied into standard rate minus actual rate. Then material quantity variance is the term which is used is about efficiency. Labor efficiency variance is the formula is the difference in the standard hours and the actual hours applied at the standard rate. Quantity variance or the efficiency variance can be further split into mixed variance and the yield variance. Okay. So here it is given, the material variances are given as the total variance is split into price variance and usage variance. Then later on, they are further split into what is the mix variance and the usage yield variance. There are certain terms which are mentioned: SQSP, standard price for standard quantity, standard price for actual quantity, actual price for actual quantity. What are these terms? We will see. Why are we looking into that? See, when the planning is taken up, let's say that they have planned for 500 units. So the plan is applicable at 500 units, but the actual may not happen at 500 units. The actual thing can be at some other level. Let's say they have the activity took place at 1000 units. So the values which are decided at 500 definitely will be not comparable with 1000 units activity level. So what is done is the standard price later on is adjusted for actual. So if it was for 500 units, the standard price for the standard quantity, but to make it comparable, 500 units and 1000 units are not comparable. So this standard 500 units should be made it to 1000 units. Later on, calculate what is the standard price of the actual quantity. So we are adjusting the budget according to the actual activity. So the standard price for the actual quantity has to be calculated. Of course, the actuals will be at the actual price only, actual price for actual quantity. The terminology, just remember the logic. I will keep explaining to you at every given stage and step, and then we can proceed further. So that's the material variances. Then important thing, what we have to remember is why would there be a variance? That is again another important aspect what we have to look into. Why would there be a variance? In all situations, we have to understand that see they were not able to estimate it properly. So estimation wise, there may be a mistake or some error there which is present. So that is one thing what we have to remember. Okay. um, the price variance, why would there be a variance is the standard price and the actual price are different, because what they have planned to be as the price um, did not happen, because maybe they have ended up giving a discount, or they chose a different supplier. Okay, these are the reasons. The price variance, why would there be a variance? The reasons are this. You have to remember, the logically you have to understand, because later on you would be answering case studies. So if as a management accountant, as an expert, you are asked to figure it out and the reason why there are variances, so you should have an idea about why would there be a variance. Maybe at the time of planning they chose XYZ suppliers, later on they moved to PQR suppliers, some other supplier, then everything, um, the expectations, everything would vary, they would change. So if that is the case, there would be a difference in the price difference in the price variance arises. Using a different supplier, giving discounts, either on bulk purchase discounts or whatever is that a discount was offered. So that is a strategy which has to be adopted whenever the customers purchase in large quantities. They have to give bulk purchase discounts. So on account of that, there was a difference in the prices. So that is one reason. An unexpected increase in the price um, across the country, across that region, the price of the material has increased, which was earlier not anticipated. So that could have been genuinely happened and nothing. It was absolutely beyond the control. That could be one reason. So that is one thing. Then a change in material quality. So initially they expected it to be of some quality. Later on, that quality has changed. Then a change in material quality. Okay, that is one thing. Then why would there be a change in the usage variance, usage or quantity variance? How much quantity was consumed, used or usage? Rate in change in rate of scrap or wastage. Usually material, when it passes through the processes, there is some percentage of material which would get um, I mean damaged, or it would be lost. See, some type of material they spill on the way, they get evaporated, they fall on the way, um, so they get broken, things like that. These are all normal losses. So normal loss, they generally do not wait until the loss happens, count that and account for that. Generally normal loss is calculated as an estimated percentage from the past observations. They understand that and then calculate that percentage, estimate that percentage, and normal loss is calculated. They may be wrong in estimating that. So they might have estimated it to be as 5%, but 6% might have got lost, or 4% might have got lost. So there would be a difference in the usage. Okay. So after accounting for normal loss, more material was lost or less material was lost. So that obviously that will reflect in the variance, usage variance. Using a different quality of material, better quality control or more efficient work procedures, um, changing the labor mix, better quality control or more efficient work procedures. So, um, see the quantity of material or the labor hours what are used, um, they were able to have a better quality control. So therefore what they have planned and what actually happened, there would be a difference in that, or the mix was changed. See, initially they have planned like the components of material like A, B and C should be used in the proportion of, let's say, 50, 30 and 20. In this proportion they have planned 50, 30 and 20, but while using, they might have used a different combination. They might have used it as 40, 20 and 30. So that will give in 40, 30 and again 30. So the usage part of it will differ. Same is the case for labor also. Skilled labor. semi-skilled labor, unskilled labor, the proportion which they have initially decided and now what actually consumed. If there is a difference, then labor mixed variance also, there would be a difference. The reasons we should have an understanding why would there be a difference, on account of what would there be a difference, is what we have to understand. Then about the labor, I told you to simply remember that wherever material is there, we just replace it with labor. The cost variance, labor cost variance is divided. The labor cost variance is divided into rate variance and efficiency variance. That is, usage is replaced as efficiency variance. So here again, we have to keep a track of what is the standard rate for standard hours. That is what they have actually planned. But later on, that plan was adjusted according to the actual hours. The standard rate for the actual hours. Anyway, the cost of labor will be actual rate for actual hours. Okay. Now, one additional variance would be there in labor. See, we have a set of 5 variances under material, but here there would be one more addition, that is the time could be wasted on account of no productive activity carried on. But yet, for that also cost will be paid. For the time where the labor is present there in the factory premises, the rates are paid to the workers. But out of this time, some of the time the workers may not be involved in production work. So that is just idle time. That's a break time. There is no productive activity carried on. So the idle time is always an unfavorable variance because no productivity. So the time applicable, the idle time into the standard rate. That is one additional variance what we have it under labor. The rest of them are all similar to what the variances are calculated under material. So material and labor, we would see that they're on par. This is one additional. Okay. So now the logic is, when do we call the variances as favorable? When do we call them as unfavorable? That is one important thing. See, in terms of standard, when uh, the cost, the standard cost is less than, see, the basically we are comparing the standard for all the cost variances. This is applicable for the cost variances. So when the standards are there, standard is the limit what is set. They are supposed to consume up to standard or less than standard. If standard is less than the actual, and if standard is greater than actual, that is a comparison. If the actual or if the standard is less than actual, is actual incurred was more than standard. Let's say that they have decided, they have set aside a budget of 10,000, which means that they should be using 10,000 or less than 10,000, not more than that. It should be 10,000 or less than 10,000. If they end up spending more than 10,000, it is unfavorable. So in cost variances, actual should always be less than standard. Standard should be greater than actual. Actual should be less than standard. Then it is a favorable. If standard is less, actual is more, this is unfavorable variance. Otherwise, it is a favorable variance. So that part we have to remember. In case of revenue variances, it would be the other way around. Okay. Um, Idle time is always an unfavorable variance because there's no productive activity which is carried out. What are the reasons why there would be a variance in case of labor variances? Are you able to follow? Are you able to follow? Okay. Why would there be a variance arising in case of labor variances? First one, an unexpected increase in basic rate of pay. Okay. And They have not anticipated, they have not estimated while uh, the standard rate was decided. At the time it was not known, but suddenly there was an increase in rate of labor rates. Payment of bonus, where there these are recorded as direct labor costs. So maybe some bonuses were included. Bonus is not a direct labor cost, that is an increment. I'm sorry, that is an incentive, that is an indirect cost, that is not proportionate to the production. We cannot, but while accounting that, they might have accounted it as direct labor cost. So that could be one reason why there is a difference. Then using labor that is more or less experienced. So the category of workers, that is skilled, semi skilled, unskilled. So using the right skill for the right kind of work. Any any other proportion which is worked out, let's say that simple nature of work is quite simple, but if the skilled worker are employed, skilled workers come at expensive rates. Simple works can be done with by say unskilled workers, no special skill set is required, so they are paid at lower rate. But while deciding, if they have not decided it properly, very simple nature of work, skilled workers are used, then they are paid at high rates, so that becomes expensive. Okay. um, Very skilled worker, skilled work, unskilled workers are appointed, then they do not finish it in the required time, they take consume more amount of time, so it ultimately ends up in waste of time and then efficiency also. So okay, the right skill of workers have to be used for the right type of work. Otherwise, there will be a difference in the cost which would be incurred. Typical causes for idle time. Why would there be idle time? Industrial action by the workforce, working to rule, um, poor supervision, then unexpected lost time due to production bottlenecks and resource shortages. That is, sometimes the workers are present there in the premises, but maybe other resources like material was not available or something was not available. Machine breakdown was there. Some things like that. These all would result in no work taking place. So that will result in idle time. They are there present. They would also be paid for the time, but there is no work which is carried out. So that is one reason for idle time. Efficiency variance is use of time. Um, the number of labor hours, what was decided and what was consumed, taking more or less time than expected to complete due to efficient or inefficient working. So either I mean the wrong category of labor who are appointed. Sometimes the workers finish the work much faster, sometimes they go for prolonged working hours, so that is one reason. Using labor that is more or less experienced, and so more or less efficient that than the standard, a change in the more or less experience. So the categorization of labor who are appointed, that is not properly taken into consideration at the time of deciding. Then a change in the composition of mix of the workforce. They did not decide properly how many hours of skilled labor, how many are unskilled, how many semi skilled. That was not properly decided. So that could be one reason. Maybe the working methods were improved, that they consumed less time and finished off the work um, sooner. Improvements in efficiency due to a learning effect among the workforce. There is a concept called as learning curve analysis, which says that the same piece of work again and again it is produced, the amount of time which is required will reduce. We see this concept that practice makes man perfect. So the same piece of work, if it is done again and again, every time eventually when it is taken up, it would be done much better than the previous time, because they understand the intricacies of how the work has to be done. So that concept is explained as learning curve analysis, which says that the time which is taken will reduced by a certain percentage. So depending from situation to situation, that percentage differs. So that talks about every time when they repeat a similar type of work, or the production which is again taken up, they will consume less number of hours. So when they consume less number of hours, the cost of labor also will reduce. So that is one reason why there would be a variance. Okay, so for the moment, we will proceed further in that manner about what are material variances and labor variances. Then we also have the way overheads. Overheads are again classified as variable overhead variances and fixed overhead variances. Variable overhead variances also fit into this framework of material and labor. But for the moment, it becomes too much for us to look into that. Uh, on similar lines as the way material and labor are accounted, we would have it for the variable overhead variances also. Fixed overhead is on a different note. So after a while, after some time, after we practice few questions on material variances and labor variances, we will touch upon the variable overhead and fixed overhead variances. Okay. Um, so variance analysis. Let's look into variance analysis. Question number 39. A manufacturer expects to use 4 kgs of material at a cost of $5 per kg on each of its produced units. Budgeted production was for 5,000 units of a single product. In January, the manufacturer actually spent 82,764, making 4,400 units of its product and used 16,720 kgs of material. To the nearest dollar, the favorable material price variance for April is dash dollars. So let's take this question, go to Excel file and then work it out there. Someone wants to say something? Any doubt? One second. So question number 39. We are asked to find out what is the material price variance. It is also mentioned that the price variance is favorable. So that part of it has to be looked into, and then we find out. Now, what is price variance? So you have noted down what is the formula, what is the price variance. That is basically the difference between the standard price and the actual price applied for all the actual quantity. Okay, so we need to have three variables. Let me write the formula. This is question number 39. Material price variance is equal to the actual quantity applied for the difference in the prices. That is, we have standard price minus the actual price. So that's the formula. So how many variables should we have? We should have three variables. One is, okay, good, very good. We should have three variables. One is the actual quantity should be there. We should know what is the standard price per unit. We should also know what is the actual price per unit. The question says that a manufacturer expects to use 4 kgs of material at a cost of $5 per kg. So that's the standard price. Then we have budgeted production was for 5,000 units of a single product. In January, the manufacturer actually spent 82,764 for making 4,400 units of its product and used 16,720 kgs of material. Okay, so out of the three variables, first variable standard price is given as $5 per kg. So one variable we got it as. Now we need to know what is the actual price. See the actual price per kg. Then the actual quantity also is given. Actual quantity is given as 16,720. Um, because it's the first question, I'm just writing. Actual quantity is equal to, the quantity is 16,720 kgs. Then standard price is also given, which is equal to 5. Then we need to know what is actual price. Actual price is equal to, per unit is not given, but the total the cost is given. Cost is 82,764. So here we would have it as is equal to 82,764 was spent for acquiring total 16,720 kgs of material. So I'm writing it here, the calculation. Please look into that. That is 82,764 divided by 16,720. Once all these things are there, I think we can calculate what is material price variance. So let's put this one, material price variance. I already wrote the formula above. So directly let's substitute that. Actual quantity into the standard. Either ways you write, doesn't matter which way you write, whether you write standard price first or actual price first, it doesn't matter. The only thing is we should not write it as a positive value or negative value. But remember, how do we label it, whether it is favorable or unfavorable. In case of cost variances, the actual should be less than the standard to be called as favorable. The standard price is 5, actual price is 4.95. So actual is less than standard, therefore it is favorable. Okay, whichever order you want to write, whether you want to write actual price minus standard price minus actual price, doesn't matter at all. Done. So that part you remember. So the answer is material price variance is a favorable of 836. You are from Mangalore, isn't it? The college is in Mangalore. How is the situation there? You have lockdown? Yeah. Karnataka is in lockdown. We don't have a lockdown, but see, condition is quite bad here. I'm from Hyderabad. Are there many cases in Mangalore? Uh, Take care. I mean, there is some need or the other which makes us go out, or anyway now you are on lockdown situation, so there is no possibility. But otherwise also I think the whole year we need to be a little careful only. um, Take care of yourself and study, utilize this time to study. Okay. Let's look into the next question. Export is one of many items produced by the manufacturing division. Its standard cost is based on estimated production of 10,000 units per month. The standard cost schedule for 1 unit of export shows that 2 hours of direct labor are required at $15 per labor hour. The variable overhead rate is $6 per direct labor hour. During April, 11,000 units were produced. 24,000 direct labor hours were worked and charged. 336,000 was spent on direct labor. 180,000 was spent on variable overheads. So the direct labor rate variance. So the first one, question number 41, we are asked to calculate what is labor rate variance. Is equal to, what is rate variance? The difference between the standard rate, actual rate applicable at the actual time or actual hours. So actual hours into the difference between standard hours minus the actual hours. Three variables we need to know. So what are actual hours? What is I'm sorry, what did I write? I'm really sorry. Standard rate, rate variance, no? Standard rate minus the actual rate. We need to know three variables. One is actual hours, the standard rate for the labor time, the labor hours, standard rate of labor hours, and actual rate for the labor hours. So these three variables we have to find out. Once these three things are there, then we can substitute that. The estimated production of 10,000 units per month uh, was decided. The standard schedule was given as 2 hours of direct labor are required at $15 per labor hour. The variable, then the variable things, the variable overhead rate is given. 11,000 units were produced. So here, what actually is the issue is they have uh, anticipated the activity to be at 10,000 units, but the activity happened at 11,000 units. So what they have estimated at 10,000 units, everything will be different, and that is not comparable with an activity level which happened at 11,000 units. So we see that these two things are different. Then 24,000 direct labor hours were worked and charged. Then 336,000 was spent on direct labor and 180,000 was spent on variable overhead. So the actual hours are mentioned as 24,000 direct labor hours. So first variable, let's look into that. Actual hours is equal to 24,000. Then the standard rate per unit, the standard rate per unit which is given as 15 $15 per labor hour. Now coming to the actual rate. Actual rate is equal to, rate per hour is not mentioned, but the details are given. We can find out the, what is actual rate per hour. How much did they spend? The total amount of labor cost, which 336,000 spent for a total 24,000. So here 336,000 divided by 24,000. That's 14. I'll mention it here so that it's clear for you. 336,000 was the total labor cost spent for 24,000. So I think for the labor rate, we don't have to adjust anything. It is only the difference in the rates applicable for the total number of hours. But if we have to calculate the efficiency variance, then we will have to make the adjustment there. But as of now, we do not have to. So labor rate variance is equal to, is it favorable or unfavorable? Just tell me that. It is favorable. Why? Because standard rate is more than the actual rate. So 24,000 favorable. Yes, D. Answer D. D is there. Then we are asked to calculate the variable overhead efficiency variance. Efficiency variance is the usage variance. Fine. Wherever labor, the term labor is there, we just substitute with the variable overhead. I told you that variable overhead variances also fit into the frame of material and labor the same way. So efficiency variance is a usage variance. We find out the difference between the um, actual hours and standard hours, applied it at the rate, the standard rate. So here in case of variable overhead efficiency variance, let's write is equal to, efficiency will be the usage of the standard hours and the actual hours applicable at the standard variable overhead rate. Whatever is the standard variable overhead rate, take that rate and find out the difference between uh, the standard hours and the actual hours. That is the efficiency variance. How many are the standard hours and how many are the actual hours? So let's present it. Um, the rate part of it is to be taken. The standard variable overhead rate into the difference between the standard hours and actual hours. Standard hours and actual hours. So right, standard hours minus actual hours. Do we have what is variable, standard variable overhead rate? The variable overhead rate is $6 per direct labor hour. Do we see that? So we see what is the standard variable overhead rate, which is 6. So let's present this one as standard variable overhead rate is equal to 6. Second variable. Second variable is standard hours. Third variable is actual hours. The standard hours. Um, 10,000 units of per month is given. That's the output which they have decided. Then the standard cost schedule for 1 unit of X40 shows that 2 hours of direct labor are required at a rate of 15 per hour. The variable overhead rate is fixed. During April, they have ended up producing 11,000 units, wherein the plan was only to produce 10,000 units. They produced 11,000 units. 24,000 direct labor hours were worked. So actual hours are 24,000. So we have clarity about the actual hours. Actual hours is equal to 24,000 hours, but the standard hours are not given. Okay. Um, how much was spent on direct labor is given, how much was spent on variable overheads is also given. So now we need to find out what are the standard hours. The standard hours are decided as for every single unit, 1 unit of X40 shows that 2 hours of direct labor are required. How much did they produce? So we should not be making a mistake of calculating 2 into 10,000. Planning was only for 10, but when the actual took place at 11, the plan also should be at 11,000 units. So here standard hours will become is equal to 2 into 11,000. Okay, substitute that. Variable in any order you can write. Ensure that it is only a positive, but when we are writing the labeling that whether it is favorable or unfavorable, we need to be careful. The actual hours are 24, the standard hours are only 22. So is it a favorable or an unfavorable? So that part we need to understand. Unfavorable, or it is also called as adverse. Okay, so unfavorable or adverse is what we have to mention. um, Actual hours are more than the standard hours. So standard would be only 22,000, but they consume 24. So the overall variance is an adverse or an unfavorable. 12,000 unfavorable. Do we have a bit? No, 1 second. Why did Manjushri log in when she is not listening to the class for attendance sake? Okay. X Limited operates, this is fixed overhead to expenditure variance. For the moment, let's keep it aside, because one single class, so many concepts also. I didn't see it is fixed overhead. So maybe tomorrow's class we'll do fixed overhead variances. Um, okay. 45 also I will not do today. Let's take it up. 46 and 47. We'll work it out. 46. I didn't realize while pasting it. I just brought it the question. But doesn't matter. Tomorrow we will see that question. Question number 46. L uses a standard costing system. The standard cost card for one of its products shows that the product should use 6 kgs of material P per finished unit, and that the standard price per kg is 6.75. L uses its inventory of materials at standard prices. During November 20x1, when the budgeted production level was 2000 units, 2192 units were made. The actual quantity of material P used was 13,050 kgs, and material L inventories were reduced by 500 kgs. The cost of material L which was purchased was 72,900. The material price and usage variances for November 20x1 were the price variance and the usage variance. So let's start. Question number 46. Material price variance. The formula is equal to standard price variance will be actual quantity applicable into the standard price minus the actual price. So three variables we need to know. So what is actual quantity? Is the actual quantity given? During November 20x1, when the budgeted production level was 2000 units, 2192 units were made. The actual quantity of material P used was 13,050 kgs. Standard price is 6.75. What about the actual price? The actual quantity of material used was 13,050 kgs, and material L inventories were reduced. The cost of material was 72,900. Done. Let's write actual quantity is equal to 13,050. Then we have the standard price also given. Standard price is equal to 6.75. the actual price is equal to, the total cost is given as 72,900 divided by 13,050.